Mortgage rates have plunged, but cheap loans don't necessarily mean cheap homes. In fact, the recent rates that we've seen, how they've come down, that could actually decrease affordability and make homes actually more unaffordable in the coming months. And that's what we're looking at today on the Housing Nerd. Welcome to my weekly Redfin update. I'm glad you're joining us. If you're new here, my name is Jason Ferrier. I am the Housing Nerd, and I've been a realtor and investor here in Central Ohio for the last 8 years. I'm not someone who's going to tell you that you need to run out and buy a home. I'm not your typical realtor. And I'm not going to tell you that now is the best time to buy real estate. I'm also not going to tell you that you should stay away from the housing market because it's never been so toxic and you should just, wait another year or another month, or the deal of your dreams is just around the corner. I'm just going to give you the real data today. We're going to break a lot of information down so you can make an informed buying, selling, maybe even investing decision. So again, welcome. Let's look at mortgage rates. As I said, they are definitely lower. I mean, there's no doubt. This morning, according to Mortgage News Daily, they're sitting at 6.27%. I mean, you can see if I take a look at this chart here from Mortgage News Daily, how they've changed in the past few weeks. Come on, chart. Well, my chart's not wanting to cooperate. Maybe too many people are looking at it. Well, I mean, they spiked here. I'll just use this screen here. I'll just zoom into this. But you can see where 30-year fixed rates back in 2024, let's go to September of 2024, see where they were. Yep, they were actually lower, 6.2, but then they went up, right? 7.05 at one point in October after the Fed cut. So I wonder if the Fed cutting here in a week or so will actually increase mortgage rates. A lot of people want to know that, will the Fed lower rates and their benchmark rate, and actually mortgage rates will spike. You can see that's what happened last year about this time, literally like a year ago. So they spiked to 705, but since then they've been dropping, and now they dropped significantly in the past week or so. So Mortgage News Daily is not cooperating, but in any case, 6.27 right now. That's what's going on. And so this live is loaded with info. Like, I've got the entire Redfin national update for you. We're looking at demand. We're looking at supply. We're looking at home prices. I'm going to take requests for the metros you want me to review. Then we're going to do something a little different. We're going to look at 2006 through 2009, the great financial crisis and the housing crash that happened. We're going to compare that time period to right now, because many metros peaked in 2022 with home prices. Like, if I go to Boise, Idaho, for instance, watch this. Check this out. So if I go to Boise, Idaho, this is just an example. You can see that back in 2022, home prices peaked at $546,000. And then they fell sharply. So in many metros, they've had a housing crash with prices. I mean, now the median price in Boise sits at $495. So they peaked at 546, now 495. Is that a crash? I mean, that's a big drop, right? So the point is that many metros saw that in 2022, and then we're going to compare how prices have changed since then across the nation and in many key markets. And we're going to compare that to 2006 through 2009 and kind of what occurred after prices fell during the GFC. So that'll be pretty interesting. I'm going to do that here in a little while. So let's get to the Redfin update. I'm just going to knock this out, and then I'm going to look at the metros you want me to review. I've got a whole ton that you've asked for. I've got the Midwest, Columbus, Cincinnati, Cleveland. I've got Boise. Somebody wanted me to review, so I'm going to do that. I've got Travis County, Texas, Phoenix, Miami, Boston, Washington, D.C., Nashville, to name a few. I think I've got Los Angeles on this list. So if you've got a metro you want me to look at or a county, put it in the comments below, and I will get to it. Hopefully, unless there's too many, and then I won't be able to get to them all. Anyway, thanks for joining me today. It's a crazy day in real estate, no doubt about it. Like, look at this. So these are the homes sold in all Redfin metros. So this is the latest weekly data, and you can see buyer demand as far as actual homes sold is up 4.5% year over year right now. The number of homes sold up 4.5% according to Redfin. So, it's not like it's skyrocketing, but it's not declining. And this is actually the first time in a while, in weeks, that I remember that we've had a year over year increase in the number of homes sold. I mean, you can see it's been negative, a little bump. Here's negative 4.8 at one point. I mean, it hasn't been good all year. And all of a sudden, we're up 4.5%, but the trajectory is not straight up at all. So the lower rates, are they going to bring back more demand? I don't know. We're going to find out. So let me jump into the article from Redfin. We'll take a look at this. Let me just say hello to a couple people. Smokescreen, how you doing? What's happening? Echo mode, how are you? Please hit the like button if you join us. Sarasota, Florida. Okay, yeah, we'll do that one. Sarasota, Florida. Let's do it. What's up, Trippy Pen? Interest rates have not plunged. It is down close to 1% from last year. Actually, it's like, yeah, I guess about this time, yeah, it was like in 7.8%, 7.08. It's close down to 1%. It's down close to 1% from last year. That's not enough for these overpriced homes to be more affordable. Yeah, so like, our buyers just going to be like, you know what? Prices are way too high. I don't care. I'm just going to go ahead and wait until prices come down. I don't care what rates are. That's the comment I get from a lot of people. Unfortunately, that's not what the people in charge of monetary policy are trying to do, right? I mean, nobody's mentioning lower home prices. Did you hear anybody talking about lower home prices? I don't hear anyone talking about that. I just hear them talking about rates. Rates. Oh, the housing market could be much better if too late Jerome would just lower rates. Okay. Much better. Does that mean, Trump just said that, right? Like, the housing market could be much better if rates come down. Okay. Does that mean that they're going to be more expensive? Houses are, I guess that's better for asset holders, I suppose. I don't know. But thanks for joining us, Trippy. All right, let's look at this Redfin update. Pending home sales are up 1% from a year ago, and new listings are stagnant. That's true. Redfin agents say some house hunters are staying on the sidelines because they want mortgage rates to drop more significantly before jumping in. The daily average mortgage rate declined to an 11-month low of 6.28% this week, upping home buyers' purchasing power by more than $20,000 since midsummer. So, like, that's going to be the narrative, right? Like, hey, you've gained $20,000 in purchasing power. And that's the danger of why homes could actually be more unaffordable coming up, not more affordable. I mean, they're more affordable from like a payment standpoint, I suppose, but prices could go up because buyers are going to be able to afford more home as rates come down. There are people that say sellers will flood the market, not buyers. Like, it'll cause prices to come down. I don't know about that. We'll see if lower rates cause lower prices. See COVID for that answer. Declining mortgage rates are one factor pushing the median U.S. home mortgage payment down to $2,604, more than $200 below May's all-time high. But home sale prices are still rising. The median sale price was roughly $393,000 during the 4 weeks ending September 7th. That's up 1.7% year over year, the second biggest increase since April. Home prices nationally have not fallen underneath 2024 yet, much to the chagrin of a lot of people who predicted we would have crashed in 2020, 2021, 2022, 2023, 2024, and now this year, right? So it's so far haven't fallen underneath last year. Although we did in 2020, 22, it dropped a lot, and we're going to look at that. Sale prices are rising partly because new listings are losing steam. New listings are up 1.3% year over year compared to the double-digit increases in early spring. Some prospective sellers are staying put due to lackluster home buying demand, and some because they don't want to buy another home while costs are high. I think the last reason is probably more than the first reason. Like, do you really think if you're a home seller and you have to sell your home, like you must sell it, you're going to wait for rates to come down because you don't think demand is there right now? I mean, that's BS, right? Like, give me a break. People aren't that strategic, in my opinion. They're just not. If you need to sell your home, you need to sell your home. Despite falling mortgage rates, many house hunters are staying on the sidelines. Pending home sales are up just 1.1%. Homes sold, though, I showed you that, are up 4.5%. That's the smallest increase in 2 months. And Redfin's Home Buyer Demand Index, a measure of tours and other buying services, is declining. That is true. You'll see that in a minute. I don't know how much stock we want to put into that, but Home Buyer Demand Index is lower or declining. Redfin agents say there's some buyers out there, but a lot of buyers are being picky with how they spend their money and are often trying to negotiate with sellers. Good. They should. Like, it's about time that buyers get an opportunity. But tell me what you think. Like, do you think more buyers or more sellers are going to enter the market because of these lower rates? There's not a flood of buyers now that mortgage rates are coming down. There we go. There's a Redfin agent saying that. But I'm seeing a trickle as some house hunters do the math and realize rates have dropped enough to fit a monthly payment into their budget, said Nashville, Tennessee Redfin Premier Agent Kristen Sanchez. A lot of house hunters are waiting because they think mortgage rates will drop more when the Fed cuts interest rates in September. I'm trying to advise buyers that's unlikely to happen, and now is a good time to lock in a rate. The daily average mortgage rate fell from 6.85% a month ago to 6.28% at the start of the week. I'd call that a plunge, right? I mean, that's a pretty big move. Partly because of two weaker than expected jobs report, and partly because Fed Chair Jerome Powell indicated in his Jackson Hole speech that the Fed will cut rates in September. Markets have already priced in the upcoming rate cuts. Rates are unlikely to fall immediately following next week's Fed meeting. The other thing I want to know from you is, do you think rates will continue to come down? Or will they go back up? Be interesting to see. We will find out soon enough. All right, let's look at these leading indicators of demand. We already looked at the mortgage rate. Let's look at purchase applications. Look at this. I mean, people applying for mortgages up 23% year over year. You've got 23% more people applying for mortgages versus last year. That's not refis. Those are mortgages. That's a lot. Up 7% from a week earlier. Okay. All right. So basically, you've got more people applying for mortgages versus last week versus last year. That makes sense. That makes sense. Redfin Home Buyer Demand Index down 2% from a month earlier. Down 10% from a year earlier. I really don't pay attention to that index too much, but it's down. Google searches for homes. How many people are typing into Google home for sale? Unchanged from a month earlier, only up 4% from last year. Touring activity up 21% from the start of the year. At this time last year, it was up 4%. So I guess that's up 17% year over year in the number of people seeing homes. So more people out looking at homes. The other thing I want to know from you today, please let me know this. Are you someone that is now going to buy because rates are lower? Or are you someone that is like, nah, not until prices come down. I'm just going to stay on the sidelines. I'd like to know, are these lower rates enticing you to buy? Median sale price. How's that doing? $392,000, 976. That's basically 393 grand, up 1.7% year over year. That median price is like sticky, right? Stubborn. The median price is stubborn. There's no doubt. I mean, at the end of the day, prices just refuse to cooperate. They're like, nah, I'm going to stay high for a while. I like being high. Median asking price, $399,000, 634, up 3.1%. But that has come down. You'll see that in a minute. Median monthly mortgage payment, $2,600, up $35 from a week earlier, but still the lowest level since January. Pending home sales, 80,193. Sales in general, pending home sales, homes sold, they have not been good this year. They have not been good at all. I got a comment on Facebook, actually, which I don't frequent very often, but I did have somebody on Facebook mention who was a home inspector that he said that the home inspecting business is slow right now. And that's in central Ohio where I live. So, home inspectors are feeling it. I know as a realtor, as a realtor right now, I'm doing fine. But I know there's a lot of fellow realtors out there who are not doing well and struggling because of lower transaction volume. Now, I'm sure as a viewer, you feel sorry for the realtors. So comment below and tell me if you feel sorry for us, the realtors out there. I think I know the answer, but I still want to hear from you. New listings, 89,055. Look at this, pathetic. This is a big problem. Maybe the biggest red flag in our business right now. Maybe the biggest red flag I'm seeing in the industry right now or in the market. New listings. New listings. This has defied all logic. It's defied all logic, all realm of, it's like the Bizarro universe or Bizarro parallel universe from Back to the Future Part 2, right? Like when Biff ran the world. People thought we would see an explosion of new listings this year because of all the distress, right? You got Airbnb, you got institutional buyers or institutional owners, right? Private equity, mom and pop landlords, fraudulent realtors, whatever, right? You've got all these people and all that grift is going to come to an end in 2025 and they're going to clamp down and there'll be a ton of inventory that's going to flood the market because of all the distress. Somebody forgot to tell the distress to actually come, though. Active listings, look at this. 1,207,000. Well, 1,208,000 active listings if I round up. That's up 10.8%. Smallest increase since March of 2024. Wait till you see that chart. Active listings are dropping like a stone in water. It's like headed towards a trajectory that if demand picks up at all, we could see fewer active homes for sale this year than last year by the end of this year. Like we could actually see a decline in inventory by the end of the year. Wait till you see that. Months of supply, 4.4 months of supply. That's up 0.5 points. Share of homes off the market in 2 weeks or less. How fast are homes moving? Still 30% of homes are moving within 2 weeks, are going into contract. Median days on market, 45. That's up 7 days year over year. So the homes that do sit on the market, a lot of them are sitting longer than last year. Share of homes sold above list price, 25%. A quarter of all homes are still sold above list price. That's down from 28% though last year. Average sale to list price ratio, 98.5. This has come down quite a bit, down from 99%. There's just a lot of sellers with wish pricing. A lot of sellers are like, you know what? I'm going to price my home here. I just met with some realtors this past week, great people here in Columbus, and did like a little presentation on some housing market data, which is really fun actually. And they admitted, like they told me, and they had story after story of clients where they are like, man, you're listing the home way too high out of the gate. And they're sitting on the market because you have to list the home correctly off the bat, right out of the gate. And people aren't. A lot of sellers still think it's 2021. So they're like, wow, my neighbor sold for 400. I'm going to sell for 425 because my home is better. Everybody thinks their home is better than their neighbors. Everybody. I mean, that's how people are. They're proud of their property, right? Anyway, people are getting somewhat of a discount, but they're not getting the deal of their dreams yet. Although the deal of your dreams may exist out there, it's not a bad time to buy if you know how to hunt for a deal. Redfin metro level highlights. These include the 50 most populous U.S. metros. Who are the winners and losers this week? Let's find out. Median sale price. Goodness gracious. Pittsburgh, PA, the Steel City, 11% increase in the median sale price year over year. I won't name any names, but I hear somebody talking about Pittsburgh like often lately about how prices are declining there. Enough said. Just look at that chart or look at that number. Detroit, Michigan, up 10% in prices year over year. New Brunswick, New Jersey, up 7%. Cleveland, Ohio, up 7%. Milwaukee, up 5%. Where are prices falling year over year the most? Well, number one decline in the top 50 metros. Think about that. Las Vegas, down 1%. That's it. I thought maybe it was 11%, but it's not. There was a place that's up 11, but there's only one place that's down 1.1. That's the Sin City. San Francisco down 1%. Portland, Oregon down 0.9. San Antonio down 0.6. Denver down 0.5. Notice what's not on here anymore. Florida. Florida's not on there. They're not on the year over year list. This is scary. This is a scary stat. Prices declined in 9 metros out of the top 50. That's like 80%, right? 80% of metro. That's 20%. 80% of the metros had year over year price increases. Wow. 80% of the top 50 metros houses are more expensive than last year right now. Now, prices do come down from the peak in the summer through fall into the winter months. That's obvious. I mean, the chart's like this, right? It's up like a mountain and then down. That's just normal. Happens almost every year. If you look at the data, almost every metro is the same. But over year, compared to last year, prices are still more expensive in 80% of the metros. Pending sales. Where are homes going into contract the most? Look at that. Pittsburgh, PA, 11%. So buyers in Pittsburgh are like, you know what? Game on. Let's go. West Palm Beach, Florida. Okay, no crash there. Up 10%. Chicago, 7%. Cleveland, 7%. And Cbus, right near me where I live, 6.4%. So these metros are obviously active with buyers. Look at where people are not buying. Houston, Las Vegas, Seattle, Denver, Orlando. This one is really crazy. Look at new listings in some of these markets. Pittsburgh, PA, 17% more inventory hitting the market than last year. That's a lot. Baltimore, 16%. Minneapolis, 11%. Montgomery County, PA, which is like Philly, like I think it's just west of Philly, up 10%. Boston, up 7% in new listings. That's great. You need new listings. Orlando, Florida, Tampa Bay, Fort Lauderdale, Riverside, and West Palm Beach, all down in new listings. You have to pay attention to this. Other people, I've seen other YouTubers who cover the housing market gloss over new listings very fast, but it's important to look at new listings. That's where that's like, it's like a basement in a house. If you live in the Midwest or you have a basement in your house, the basement's like the heartbeat of the house, right? Whatever happens in the basement, good or bad, is happening in the house. The basement's nasty, moldy, mildewy. If it's crumbling, if it's not solid, the house isn't going to be good. New listings have to be growing in order for you to have more active inventory, in order for you to have a price decline. The people that say inventory does not matter, supply doesn't matter, are just upset because the supply isn't going their way. And they don't like the fact that people are not listing their homes. That could be you. I don't know if that's you on listening or watching now or on the replay. But if it is, that's okay. Like, it's okay to be like, I wish people would sell. But you have to admit that supply drives pricing. That's just how the dynamics work. So these markets, Orlando, I mean, who would think at the beginning of the year that Orlando would be down year over year, 16% in the new listings? Tampa Bay, 14%, 15%, whatever. At that point, doesn't matter, does it? Fort Lauderdale, 13%. Riverside, California, that was like ground zero of the housing market crash. Here, look, I'll give you a preview. Check this out. This is this is courtesy of Resi Club. And look at this. This is the decline in home prices in 2006 through 2009. This map's going to shock you once we dive into it later. So stick around for that. But look at this. Home price shift between July 2006 and 2009, 48.6%. Prices went down in 3 years, 48% in Riverside County, or in Riverside, California. I actually lived out there during that time. And I was in new construction. It was nuts. It was nuts. But if you look at the data now from Redfin right now, new listings of homes coming to market are down 10% in Riverside. That's completely the opposite of what we saw back during the GFC, even leading up to the GFC. There was a flood of homes hitting the market, like thousands, like just throwing them on the market. Now, not so much. West Palm Beach, another Florida city. So like Florida's like flip-flopped. Like you've got Florida completely changing from what we saw earlier in the year. Every video we saw was Florida crashing, Florida's doomed, Florida's over, tons of inventory. I mean, I don't know, the pain must have left. But in reality, it's still there, right? There's probably a ton of active inventory, but just not a lot of new listings, which is crazy. Crazy. Anyway, I thought that was, that's kind of covering the national look. Let's, for a second, though, look at this. So that's homes sold. We've already reviewed that, up 4.5% year over year for all, nationally. Now let me look and show you this. Look at active inventory. Look at this. Look at this number. I mean, look at the chart. Look, it is what it is. Like, it's headed straight down. Not straight down, but it's headed down quick, right? I mean, this looks like a Cisco Systems chart during the 2000 bubble. Just down. Woo! Like, we peaked at like 19% growth in inventory. And now we're down to 10.76%. I mean, last year, about this time, we had 1,100,000 houses on the market. Now we've got 1,200,000 houses on the market. So we're about 100,000 units off from last year, or up from last year. So like, the point is, it would be absolutely like bone shatteringly crazy. I mean, inventory was really our bright spot at one point this year. That was the one bright spot for buyers, was that, hey, inventory is rising. Nobody's talking about this. Like, I'm starting to hear some grumblings from housing bears that, like, people that just don't like housing, right? They want housing to be like free or equal for everybody. You know, they have that fantasy that'll never come true. So, like, they are kind of begrudgingly starting to admit and put in their narratives that, okay, supply is like I thought it would be. But you could see that happen earlier in the year, because look at this. I mean, all you gotta do is look at new listings from earlier in the year. You don't have to be a rocket scientist to figure this out. I mean, they were really going up. Like, if you look at this chart for new listings this year, they were going up and up and up and up. And they peaked. Like, there was a clear peak of new listings at 110,896 for that week on average, when you look at the 4 weeks rolling and you average it out. But then they fell. And look how this 1 week here, they fell sharply. And now they're up a paltry 1.3%. I mean, back in 2022, that's what I was pointing at earlier. That's when a lot of areas saw a housing crash in their market, was the prices ran up, or I'm sorry, new listings ran up and active listings ran up as well. And that caused price decline. But this year, we're just not seeing the new listings. Just not seeing them. I mean, they're just sluggish like a wet sponge. And look at this. It's just, I don't know. These are active listings again. That's what I switched to. But I don't know. I'd love to know what you think about this active listing trend. I mean, the data is clear. Active listings are falling. Now, there's some markets where they're still going up, but wait till you see some of these metros I'm going to look at today. You'll be like, what? How can that be possible? Because I've done like a preview on some of these. It's definitely different than what a lot of people expected. Even I didn't expect active inventory to fall like this right now. And if demand comes back, I'm not saying it will come rushing back, but it could, right? You have to admit that it could. Buyers want lower payments. If that comes back, that demand, I mean, this is happening with inventory being, or I'm sorry, demand being like basically flat year over year. I mean, up a little bit, but not a lot. If all of a sudden there's a 2 or 3% surge in pending sales and homes sold, yeah, that could change this trajectory a lot, make it even go down faster. Anyway, that's, to me, as a housing nerd, that watching that is fascinating. All right, let me look see what's going on. Let me look at some comments here. All right, yep, I got Sarasota on the list. Echo, no problem. Can you do, whoa, what county is this? Washtenaw, did I say that right? Washtenaw County? Michigan. Yep, I'll do it. Just going to make a note, otherwise I'll forget. And I'll save it. The Italian Stallion, Gangsta Banksta. The foreclosure and the ability to qualify to buy homes will bring prices down in Central Ohio for the next year. Did you know something we don't know? There are, you know what? I am seeing more foreclosures. The question is, will like investors or buyers snatch them up? I would think they would, but you're right. Foreclosures could come, but you know, that moratorium for foreclosures is not happening. It's happening next month, right? Is when that's not a moratorium. It's I can't think of the name. Oh, partial claim. The partial claims that are happening with foreclosures, those are ending. Shout out to Melody Wright, by the way. She's been covering that for like a couple years now. And I think at first people thought she was nuts. Even I probably thought she was nuts. But, you know, she's right. I mean, the moratoriums are ending. The extend and pretend is ending. The partial claims are ending. But we probably won't see. I mean, I just heard Melody say this, that we probably won't see material foreclosures until 2026 because they can still use a partial claim, right? I mean, there are still extend and pretend programs that are going to be in place. And the other thing is, did you guys know that student loans, there's a lot of people that are still in forbearance, that like the whole thing about, hey, now you got to make your student loan payment. You know, the hammer's finally dropping. You know, all that's been kicked down the road. I heard that from Melody as well, did some research and found out she's right. Like, and the deadline isn't until like 2028 when they may have to start making student loan payments again, just because of like a legal loophole. Yep. The Intel project around New Albany and Johnstown alone will help bring prices down because the project will not be completed at any time. Well, the government now owns 10% of Intel. I think it will be completed, but it is delayed. And I'm sure the people in Johnstown would love to see lower prices. And Johnstown is where the Intel plant is, around the area. I talked to somebody in New Albany a couple days ago, which is a city near the Intel plant. They said they're seeing more homes sit on the market for longer. They're probably $1 million homes, but you could be right, gangsta banksta. Hangry old man. I love your comments, hangry old man. You make good comments on my channel. Good morning. How are you doing? Gonna be hiking Mount Rainier today. Washington is expensive. Man, that's an awesome hike. You're not gonna go to the summit, are you? What's the name of that? Glacier? What's the name of that? There's like a glacier there or something you can hike up to. Or maybe you are going to the summit. Good luck. Be safe. I've never made the summit there, but I've hiked there plenty of times. Used to live out there in Seattle. YouTube, what's happening? As rates drop even further, more buyers will enter the market. I would think so. Like, just logically speaking, lower rates equals more demand. You got to think that, right? If I'm betting on a table, I'm putting my chips into that square or that whatever, on that part of the table. I'm going to put my chips there because I think you're right. That's how consumers buy. That's why buy now, pay later is so popular, because payment matters. That's what people want, is a lower payment. I mean, a lot of people on my channel, and I see it all over YouTube and, you know, even Facebook, rates don't matter. We want lower prices. I understand that, but that's not what's happening. I don't know. It seems like our administration wants, and the monetary policy wants inflation, not deflation. What's up, Trippy Pen 8? This past week, I've noticed a significant increase of homes in the $200,000 to $300,000 range in Kansas City, Missouri. All of them visible flipped homes. Yeah, interesting. Do you want me to look at Kansas City? Let's look at that. I got to do the county there though, because they don't. Redfin doesn't help me with that data. They don't do Kansas City for some reason. They do the county, which I think is Jackson County, if I'm right. Trippy? I'm not 100% sure. Not true. I'm a buyer watching, but will not offer till prices decrease. Okay. Yeah, I think a lot of people are in your camp. Hey, let me ask you this, Trippy. Like, at what point do you throw in the towel? Like, let's pretend, we're just going to pretend for a second. This is fun. Like, what if rates got under 5? But prices kept going up. And let's pretend the houses that you were looking at now, or you wanted to buy at $250,000, are now, let's pretend they're, you know, 300 in a couple years. So prices are up $50,000, but rates now are under 5. At what point do you throw in the towel and you're like, you know what? I'm just going to pull the trigger and roll and use a lower rate to get a better payment? Or does that ever happen? I'm just curious. Hangry, what's up? 5.625 with a 0.59 points is the best deal in a long time. Wow. Yeah, that is. Yeah, I can't argue with that rate. Can't. More buyers should nudge prices up. I would think so. That's the problem. That's why none of this really makes sense. Excuse me, I got to close my door. That's why none of this like makes sense from an administration standpoint. I mean, it makes sense. Like they're doing what they want to do because they own assets. I mean, nobody on you know nobody in the administration wants higher rates because they all own real estate and they want to refinance or they want to buy more assets. They want cheap money. So that makes sense. But it's sad that right now, I don't think rates need to be lower. I think they need to be just left alone. Just don't monkey with the rates. But I don't know. You grew up in Montgomery County, PA. Okay, cool. We paid $154,000 for our house in Gilbert, Arizona in 2010. I hope to sell it in December for $525 if we're lucky. And you're going to be climbing Mount Rainier today, huh? Wow, that's cool. Oh yeah, you're the one that's trying to thread that needle, right? You're trying to sell in December and then you're going to buy, right? So you're hoping to thread the needle, I think, on your purchase. Do you think listings are falling because the golden handcuffs of low interest rates? Yes. Yes, I do. Yes. I get comment Stunfitch. Hey, how you doing? Good morning to you. I think it's absolutely because of the golden. I mean, anybody listening, it doesn't matter if you want higher or you want lower prices, higher prices, lower rates, whatever. Logically speaking, anybody on this channel is not going to shoot themselves in the foot, or at least hopefully they wouldn't, and break their golden handcuffs. They're going to stay in their house at a low rate, at a low price, at a low payment, because switching would make no sense. And many people can't afford to switch. Like if I had to sell my house today, the house that I'm in right now, that I'm sitting in with you, and buy in this neighborhood that I live in, it ain't happening. I'm going to rent and probably pay more in rent than I do in my mortgage right now. Definitely for a comparable house. But I'd probably have to move. I'd have to live somewhere else. I'd have to live in a different area of Ohio, different town. Like it would be very challenging to rebuy my house. I'm not afraid to admit that. So I have golden handcuffs. I'm handcuffed. Plus, I like my house, but other than that, doing skyline 5.5 miles and 2,000 feet of climbing. Man, good luck. Be safe. Yeah, I've climbed. I don't know that I've done skyline. I don't remember, but mortgage nerd. I'm here. What's up, Steve? How you doing? Good morning to you. I'm going to get to the Redfin stuff here in a minute, the metros. Sorry, wasn't trying to. I just like hearing your or like seeing your comments. The houses are way overpriced. I'm not paying $500,000 for a house. That's really worth $250,000. They're ripping people off. I understand, like, but it's really. I mean, in that case, why not just make a low ball offer? Like, if you think the values are actually inflated, then make an offer at the value you think it should be at. You know, you just have to hunt, right? But I mean, prices are really what people are willing to pay. And the prices are what they are because people are willing to pay that. As crazy as that is. Crash bros will cost people money. Yeah, I often wonder why the narrative is, hey, if you listen to somebody saying the housing market's not going to crash, they're going to cost you money, but you never hear them admit that by waiting you're losing money. Right? You never hear that part. So to your point, you could be right. I think in certain situations they are. The first person I ever watched on YouTube was Nick Gurley. And I remember seeing him on YouTube when I first got into real estate. And I was like, wow, the market's going to crash. This was 2019 or 20. I think it was 19, maybe even 18. And I thought, wow, the market's going to crash. I got in the wrong business. And obviously it didn't. Prices are much more expensive now. Make every home loan one-time assumable for first-time home buyers. That's not a bad idea. That's not a bad idea at all. If the government would if the officials really wanted to help the housing market, they would create more opportunities for first-time buyers, not by goosing the market, but by doing this. Like, hey, we'll allow you, I mean, you can assume an FHA loan right now. You can do that. You can assume a VA loan normally or a USDA loan, but the process is not easy. By the way, to assume a loan or to find an assumable a house with an assumable loan, you could check out Rome, ROAM. And Rome is a website dedicated to assumable loans, assumable mortgages. Could be a way to find an opportunity. Anyway, let's take a look at these metros. I'm going to do Sarasota, Florida first because that's what somebody was on. And then I'm going to do that one in Michigan because somebody had asked for that. Can I look at Sarasota? Maybe I have to look at, is there a county for Sarasota? Look, Sarasota County, Florida. There we go. Let's look at this. Let's start with active inventory. Yeah, look at this. What in the world? Are you sitting down for this, Sarasota? Active inventory of homes for sale. I'm just going to like double check, see if I'm alive, if this is actually real. Down, only up 3.6% in the number of homes for sale in Sarasota County, for the entire county. You're basically nearly flat in the number of homes for sale in that area, in that county. And here's the other thing that drives me nuts about people on YouTube with the housing market. Like, again, they're just being disingenuous, I think, a lot of times. Like, I've heard them say that, well, just wait a few more weeks because Florida's selling season is coming up. And we're seeing, and they're like, you know, we're seeing more active inventory in Florida than we did last year, and active inventory is building. And then I look at a market like Sarasota County, which is a big county in Florida, and look at active inventory falling nearly under 2024. Wow. That's surprising. Okay, let's do new listings there and see what we get. What do we get in new listings in Sarasota County? By the way, if you're joining us, hit the like button. Don't be a freeloader. All I ask is that you hit the like button. That's it. And then make a comment. New listings in Sarasota County, Florida. Oh, my goodness. 13% down. Down 13% year over year in the number of new listings. Man, who made that? Who asked for this? Who asked for Sarasota County? Echo mode. Man, tell us what's going on, echo mode. I mean, I'm doing the county. I'm not doing the city. But in the county, new listings are down 13%. It's a 4-year low for this time of year right now. I mean, you had more new listings for this time of the year in 2024, 2023, 2022. Yeah, that's crazy. Let's do pending sales. What? What is going on here? What in the what? Come on, Jay. What's happening here? Oh, it's not letting me. I know how to fix you. Pending sales of homes. Sorry, it took so long. Up 3.3% in Sarasota County. So you have a lot more people. I'm sorry. You have more people buying, and you have fewer people listing their home for sale there. Like, that's shocking. What about homes sold? Up 1.7%. So you got more demand and less supply. Yeah, not a good recipe. What's happened to prices there? Wow, look at prices. Wow. Look how they've fallen. $405,000, down 6% year over year. I mean, this is a 4-year low by far in prices. I mean, prices have come down a ton this year. Maybe that's why a lot more people are buying. And maybe that's why people aren't listing there. Maybe they're like, this is a horrible time to list. Prices are falling through the bottom of the basement. Their peak was, it looks like, back in 2023 at 500 grand, the median price. Now it's 405. So like a market like this, you tell me, is that a crash? Looks like it is a crash. I mean, it's 100 grand. I mean, that's what, 20%? 500 to 400, right? My math's right. Yeah, 20%. So there's a market that's crashed already. Wow. Well, if you're looking for a house in Sarasota County, Florida, I mean, maybe now's the time to go after and do it. I mean, you hopefully have some opportunities out there. Jeez. Yeah, that's a decline in prices for sure. That was a cool market to look at. Thank you for suggesting it. One other thing. Let me look at one other thing there. Average sale to list price ratio. What do we got? Yeah, look at that. 95.4. So buyers are getting at least like a 4.5% discount, at least. Right off the bat, without really probably much negotiation. That just tells me the sellers are pricing their homes too much, too high. They haven't really read the market. But eventually sellers will figure it out. They will. Okay, that was Sarasota. The other request I got was, I can't even pronounce this county. I'm embarrassed. But it's, how do you spell that? Let me go back and look. Let me see if Echo it said something about Sarasota County. He may have jetted. Yeah, I don't see him on here. Anyway, Echo, if you can come back to us and let us know about Sarasota County, because that was wacky. That was wacky. I don't see many markets like that, and I look at a lot of them. All right, let's do this one. Washtenaw. I can't say it. W-A-S-H. Oh, man. A-S-H. Oh, there it is. All right, let's look at this. Active listings. Up 23% there. You had more in 2022 in Washtenaw County. Washtenaw. Yeah, it's driving me nuts. You do have more homes for sale. There's no doubt. That's good. Got 1,009 homes, they're saying. Roughly, right? New listings up 2.4%. All right, good. So that's kind of holding up. Pending sales up 6%. So there's more demand because probably you have more inventory, right, on the market. I think that's what we're going to see. If we see rates come down, you could see inventory actually rise as people decide to list their homes and buy another one. But that's the catch. 80% of people that sell buy something else. So you got more activity. That's what you need. You need more price discovery, more churn in the market. And that's good for, everybody, including realtors, obviously. Let's look at, let's look at median sale price. Whoa. Look at this. $444,000. That's expensive there. Up 14% in median sale price. W-A-S-H. I'm just curious where it's located. Oh, Ann Arbor. That's where it is. Ann Arbor. Man, That's an expensive county. I'm surprised how expensive it is there. But up 14% in the median sale price. Goodness gracious. Is it an all-time high? No. You had 446 in 2024, but now you've got 444. I mean, it's close. I mean, that thing has gone up all year. Look, started at 383, now 444. Markets like this concern me a lot when it comes to lower rates. Like it doesn't seem like, just when you take an overview of the market, it looks like prices are still going up. You've got more active inventory. You've got more new listings. You've got more buyers too. So like, do you really need lower rates? Do you really? That's not going to help. I mean, admittedly, if I was buying a home in this market, I would want a lower rate because I want a lower payment. It's a tricky situation. Jeez. Okay. All right, on to the next one. That was a crazy market too. So I did Michigan, I did Sarasota. If you have a market you want me to look at, put it in the comments. You know what? Someone did. I saw one come across. Let's see who I got. Who do I have? Let's see. Summit County. Summit County, Ohio, huh? Okay. All right, let's do Summit County. I assume that's what you mean. Don't want to look at that. Yeah, let's not even look at that yet. All right, new listings in Summit County, Ohio. What do we have? And let me just double check something real quick. Summit County, Ohio. Yeah. So Summit County is in Akron. That's like the Akron, Ohio area, right? That's what we're looking at. Other people in other parts of the U.S. are like, Akron, Ohio, what's going on there? Well, you'll see here in a minute. So new listings actually up 10%. So good. We need more new listings there. There's no doubt. Let's do active inventory. Like the other markets, you're seeing active inventory start to fall now, but it's up 8.71%. By the way, Christina, thanks for joining us. Let's do pending sales. Pending sales. 12%, 13% up. Yeah, 13%. So definitely more people buying. You've got some more new listings. You've got active inventory higher than last year, although the active inventory is falling. It's crazy that like demand has just went up this year and kind of stayed level. I'm seeing that in other areas too. Just kind of a weird year. I wonder if it'll fall as fall comes, right? As winter comes. If they lower rates, maybe it won't. Let's do median sale price. Oh man, I was afraid of this. 241, up 2%, not a ton, but you just came from an all-time high of 253,000 when that was up 10%. Prices are just going up there. And it's like this in a lot of the state, unfortunately. I don't see any relief for buyers at all. I just don't. It's not great. What's the new listing median price? This is how much people are charging as they put their home on the market. 216 grand. Wow, look at that. 216, 241. That's nuts. Look at this. The listing price is lower. The median listing price is lower than the median sale price. I don't see that often at all. Wonder what the sale to list price ratio is there. 99%. It's got the housing nerd stumped. But I do know that prices have not relinquished there at all. They continue to go up and just grind higher and higher. I mean, maybe because homes are $240,000. You know what? I don't have that data. I was going to look at investor activity there. I don't have that. We're going to look at investor activity too. I've got that on the docket today because I have I have fresh data on investor purchases. They've gone down. I can tell you that, but they're still there. Investors are still buying. Yeah, maybe it's investors in Akron. I mean, price is only 240 grand. So most people on the channel are going to go, man, give me 3 houses. Huh. Anyway, that's what I'm seeing in Akron. Prices going up, more supply, more people buying. It's not a dead market. All right, let's do the next one. That was Akron, huh? Who else has one? I've got some if nobody does. I can guarantee that. Glades County. What's up, RR? What is that? I always like to look at people's pictures on their little avatar. I can't tell exactly what that is. Can you look at Glades County, Florida? Yeah, let's look at Glades County. Where is that? Let me look. I always like to know where it is. Let me look. Glades County, Florida. Okay, in the middle of the state, huh? Okonobi, is that how you say it? Near there? It's near a lake. I don't know much about Florida, but it's between Fort Myers and Palm Beach in the middle of the state, it looks like. Looks like a big county, like as far as geography goes, right? That's it right there. All right. That's what we're looking at, huh? Let's do it. Glades County. Glades County, Florida. New listings. What's up with Glades County? Oh, we only had 2.5. Let me try this. Oh, not many new listings. There's not a lot of activity there according to Redfin. So new listings are down, but you only got 2.4 listings. I don't know if that's right. It may be because there's just not a lot of transactions there. Let me think. Let's do this. Let me go down here to the monthly data and see if I can help you here. Because I don't want to just discount you. I want to help if I can. I'm going to look at the monthly data. This may give us another picture. Just because it's a month of data versus a week. So like, let's look at inventory and see. Yeah, this is much better. Okay, so as far as active homes for sale in Glade County. By the way, you guys can come to this Redfin info anytime you want in the data center. It's all free. Doesn't cost anything. And out of all the providers out there, as far as like charts go or just trying to dissect data easily, Redfin, in my opinion, is the best. Zillow has a similar feel. So does Realtor.com, but Redfin is much more robust. So 58 homes for sale right now. They say you have in the whole county. Well, that was as of the end of July. The August info isn't in here yet, but it gives you an idea. So that's inventory. Let's look at new listings. 8. Just in a month, 8. I don't know if that's right or not. Let me go back to active inventory though and look at year over year. So year over year in active inventory, you were down in July 10%. But you only had 58 homes, so that's not hard to come down when you only have 58. Let me look at home sales and see what happened. Home sales, you were down 53%. Let me look at the value. How many home sales did you have? You only sold 6 homes. Man, there's not a lot going on there. Tell me if that's true, if that's like you're just, or if this data looks completely wacky. Let's look at median sale price. Median sale price, $253,000. And year over year, down 6.1%. I don't know. I'm not sure how much I trust this data there because maybe because there's not a lot of activity. I don't know, but it seems awfully sparse with information. So I'm not sure that was much of a help. It looks like your inventory is about, I mean, let me just do this. Let me look at the value again. So you got 58 listings. Let's pretend that's correct. Like if you go back in time, this is definitely more active inventory than you've had in a while, right? If I go all the way back to here, 28 back in 2020, that was low. This was really low here. This was in May of 2022. You only had 22 listings. But look back here, back in like December. Yeah, let's see. Let me go. September 2013, you had 81. So you had a lot more inventory back in the 13s, 2013, 14. You had more inventory for sure. But now you're gaining it. I mean, you can see that trend upwards, right? So you are gaining inventory, but it doesn't look like, let me go back and look at prices, median sale price. I mean, it's kind of sideways now with the median sale price over the last couple of years, right? Like here it was 2022 it was 153, but it fluctuates a lot month to month. Tough with that number of sales to really look at it. My apologies. But I hope that helps somewhat. I don't know if it did, but I did my best. All right. Nonetheless, I don't care. I mean, I'll look at any market. Oh, you're welcome, Christine. About Akron? Sure. Yeah, I'll definitely look at Denver. William White, what's happening, Mr. William? Thanks for joining us. I appreciate it. I appreciate the suggestion and the time. Seriously, if you're watching this, really appreciate the time because I know time is valuable. All right, let's look at Denver. So I'll look at Denver. I'll look at one more market, and then I'm going to show you the 2006 through 2009 compared to now. I'll jump on that for a few minutes. Then I'll come back and do more metros. Then I'm going to take a break and not take a break, but I'm going to do the investor activity because you guys are going to love that. And then I'll do more metros to round it out. And of course, if you have any questions, comments, whatever about the housing market, I'd love to hear them. New listings in Denver. Wow. Down 5%. Down 5%. Yeah, I don't get it. Like I do not get it how these metros are just not surging with new listings. And it really was all of a sudden. I mean, a lot of metros peaked like this with new listings. Then they started to fall and they fell fast. They fell fast. It was almost like the faucets were just turned off. Pending sales. What's up with that? 3.9% down. Nobody buying, nobody listing. Or fewer people buying, fewer people listing than last year. And look at active inventory. I mean, it's up 24%. It's up 24%, but it's falling now, obviously, because new listings are falling. Now, median sale price. What do we got there? Oops. $589,000. Denver's expensive. That's basically flat from last year with pricing. Like Boise and some other markets, especially like the COVID boom cities, $613,000 was what you had back in 2022. And then it fell, prices fell, and they've kind of continued to fall. And now 589. So, like, I mean, I guess that's not a massive difference. 23,000 or so, 24,000 from the peak. That's how much Denver's off. See, I just would think we would see more carnage. but I guess not. Not yet. I mean, in a strange way, you're really like from the peak, Denver is down certainly. So if you bought in this time period right here, like if you were to buy, if you had bought back in 2022 from basically February to what's that? May of 2022, you definitely have lost value. But if you bought any other time than that, you haven't lost value on average with the median sale price. It's not like that's, I mean, obviously every house is different. Every situation's different, but like if you just look at the overall picture. So there's like a window of, what's that? 3 months, 4 months, maybe, where you actually would have lost money if you had bought during that period of time, or lost value on your home, I guess. But who knows, if buying demand comes back, this number could go back up. It'll be fascinating to watch. Denver was on everybody's crash list too, right? And maybe that's the crash. Maybe we've already had our crash. Who knows? But hopefully that helped. That's what Denver looks like. That's what Denver looks like. All right, got some other comments I'll look at briefly. You know what? Let me look at another area first, then I'll look at comments, and then I will show you this 2006 info, because you'll be like, what? What? Oh, I got one right here. Manya Pablo. Welcome. I'll definitely look at Cook County. I've actually don't think I've ever looked at Cook County. I've looked at Chicago, but I haven't looked at Cook County. So let's do that. Oh man, I don't want to look at that. That's median sale price. That's ugly. New listings in Cook County, Illinois, down 0.8%, basically flat from where they were the last, let's see, 2024, 2023 are flat with this year with new listings. So it's kind of like seasonal trend. Again, look at 2022, big difference. I mean, it's completely different. In 2022, people just threw their homes on the market. I mean, you had 300 more homes hitting the market versus this year in 2022. I see that in a lot of areas. Let's look at active inventory. Oh my gosh. I mean, there are people, I just heard them last week that, and to say either they don't know or they don't want to admit what's really going on, but I've heard people say, no, every market, there's more inventory. Every market's declining. Every market has price decline. Every market has pain. You're going to see this in every market. You're going to see a crash in every city across the US. Comment and tell me in the comments today, tell me, do you think we're going to have a crash in every market? Well, I'm looking at active inventory in Cook County, Illinois, and they're at a 4-year low for this time of year. Look at this, down 1.52%, and it's hasn't been impressive at all this year. Back in 2022, look what it had. A lot more homes for sale in Cook County. I mean, you had 21,000 homes in Cook County, 22,000 homes at one point in 2022. Now, 16,000 homes. So either people purchased, 6,000 homes since then, or, people pulled them off the market, which could be a combination of both. Let's look at, did I look at pending sales? I don't think I did. Yeah, pending sales up 3.4%. What about homes sold? About flat. Yeah, basically flat. Must be a lot of people pulling their home off the market. We're seeing that a lot, obviously. People are like, nah, no thanks. Look at median sale price. I mean, it's up 4.6% year over year, $367,000. It's not an all-time high, but dang close. A few weeks ago, 371. 371 was the all-time high just a few weeks ago. Now you're 367, but who's counting when you get to that level? Like, you're so close to the all-time high. Look back in 2024, you started at 301 and you ended the year last year at 331. Then you started this year at 331 and you are now 367. So, like, since the beginning of 2024, home prices have gone up. The median home price, $67,000. To somebody's point earlier, depends what market you're in. Everybody's situation is different. But to YouTube's comment earlier, like, I don't think the Crash Bros get enough credit for wasting people's money, because I'm guessing somebody at some point said, don't buy in Chicago or don't buy in Cook County because, prices are going to crash soon. But man, they've just gone up in the last couple of years. Yeah, not good. Not good. And it is going down now. I mean, you're down month over month probably, but that's because it's winter, right? Or it's going to be winter there. And probably the trend will be down this way, just like it is every year. And then next year it'll start up here and then go higher. As long as your inventory stays like this. I mean, you're down year over year in inventory. It's crazy. It's crazy. Well, I'm seeing that more and more, unfortunately. That is not what you want to see if you want lower prices. Thank you for suggesting Cook County, though. Stephen Humphrey, how you doing, man? There's a whole article today on boomers selling to rent in retirement and their reasons why. Pretty telling about the future of American real estate. Yeah, the whole boomer thing, Stephen, is interesting. Well, I have a graph here. I'll skip that for now. But you should check out the latest video I published yesterday about boomers and the silver tsunami, because the part everybody misses in that, and I haven't read this article, I'll definitely check it out. Where is it? Can you put down where the article is? I'd like to check it out. If everything continues the way it is right now, all these houses are going to be old when the older people retire and pass away. And I don't think anybody's thinking of that. People have this idea that the silver tsunami is going to hand the United States all this inventory that's great inventory, homes that are ready to move into, updated, kind of the unicorn out there right now. Unfortunately, what a lot of these homes are like is they're all built in the 50s, 60s, and 70s, or even earlier. Because of that, I think you're going to see a lot of inventory hit the market that people may not want. And if recent history continues, that won't change. That won't make prices go down. It'll make prices stay the same, or it's going to make them go up, because the inventory people don't want doesn't really count. Like, if nobody's transacting that inventory for lower prices, and they're like, you know what, those old homes, I don't want an old home. I don't want to buy a home and have to rewire it. I don't want to buy a home and have to change the slate roof into a asphalt shingle roof. I don't want to have to do that. And that inventory maybe just like bulldozed. There could be a lot of inventory that's bulldozed. Anyway, that's what I'm seeing. But again, I'm on the street level. Like, I'm not just looking at a spreadsheet or graphs. I swing a hammer often, bust out walls. All the rentals I own, the newest one's 1940. I know what old homes take to rehab. It's not for the faint of heart, but it can be done. Younger people may have to just pick up a hammer or pick up a second job. You're welcome, RR. Oh, it seems like sellers are just delisting and frustrated they aren't getting the price they want. I think so. I think you're seeing a lot of that. But those are people that don't need to sell. They want to sell, right? So they're not people that are like, hey, I need to sell my home. If I don't sell in the next month, I'm bankrupt. That's not what we're seeing. we're seeing a lot of people that are like, you know what? I kind of want to sell. I'd like to sell. Here's the price. If everybody gives me this price or somebody does, I'll go ahead. But if nobody does, I'll just wait and do it some other time. The problem is that the narrative that I keep hearing over and over is that there's motivation that's turned into distress. Well, if it's turned into distress, they must be listing their home on other websites. I'm being facetious. They have to list. They're going to list it on the MLS if there's distress. They're going to do whatever they can to sell the home. I'm not seeing the distress. Certainly not from Airbnb like we thought we would. Well, maybe we are, but it's not a wave like we thought we would see. Folks aren't selling. Dang right they're not selling. They have paid off homes. They definitely do. 40%, right? Isn't it 40% of all homes are paid off? Look at the greater economy. It's tanking. I know, but the indicator is new listings, right? Like, I'm not talking about the economy. I'm talking like whatever happens in the economy, it'll bleed through to the housing market, in my opinion. So like if people lose their jobs, then you'll see it in the new listings. If people don't lose their jobs and they want to hang on to their homes, you're going to see it in the new listings. And you are, because people aren't listing their homes. If there's a problem in the economy, it will bleed through to the housing market. But right now, what I'm seeing is people are like sitting tight for the most part and going, I'm good. I don't have to sell. What's up, Tech Ninja? How you doing? It's all about the general economy. We added 22,000 jobs a month on average for the last 4 months. That's borderline recession. If we start losing jobs, there's more downside for housing demand. I agree. You're right. But we'll see it in the numbers, right? We're going to see it. I mean, how long now have people said nobody can afford a home, nobody's buying? Yet people are buying homes. People are buying homes. There are people purchasing real estate right now. And so for a long time, we've heard the narrative that the economy is so bad that nobody's buying a home. Nobody can afford a home. Demand is going to be ruined. Well, we'll see, right? It'll all come through in the numbers. I'll be here with you and we'll look through it. And I'm not going to hide it. I'm not going to sugarcoat it. If demand falls off a cliff completely, and it's already pretty bad, but if it falls off a cliff completely and new inventory skyrockets and active inventory skyrockets and prices crash, I'll be here through the whole process. If I have to sell all my rentals because I can't afford to keep them, I will be transparent and tell you that's what I have to do. So regardless of what happens to the economy, I just look at the housing market and go, all right, well, what's going on? I love your conversations, guys. This is fantastic. The carnage is evolving national economic crash, folks. The carnage is the evolving national economic crash, folks. Okay. Well, again, I mean, housing is like a huge part of the economy, right? So we're going to see it. Houses are way overvalued. What's up, Luke? Houses are way overvalued. No one is buying, and rates don't matter now. Fake evaluations. Well, people are buying. Make no mistake. People are buying homes. I know people don't want to hear that, but they are buying. Now, maybe people like who are trying to buy entry-level homes for their first house, that's at an all-time low. I'm not going to argue that. But people are buying homes. And they could be fake valuations. They could be fake valuations, but like the data is based on the data. And the data is based on people buying a property and paying a price. And the houses are priced based on what people are willing to pay. If you can't sell your home because the price is too high, you're going to have to lower it until the price is low enough that somebody buys. There's a buyer for every property in the US. It's just a matter of the price being correct. So if 500 grand is too much for a buyer and it doesn't move and somebody lowers the price to 400 and somebody buys, okay. The market price for that home is 400 grand. If you have to lower it to 300, well, the market price is 300. So we're out of the phase of like pay anything. At least, hopefully for now, we're out of it. And hopefully it doesn't come back. But there is a price that there's a buyer for every home is what I maintain. You just got to lower the price enough. But I don't think they're fake valuations. And the county auditors don't set valuations like that. It's based on the market of what people are willing to pay. And people are willing to pay these prices. Some people are anyway. Not everybody, but some people are. Anyway, but I appreciate you joining us because I love the conversation. Steven and Tech Ninja just going crazy in the comments. Crazy. Dan in the dirt. I haven't seen you in a while, man. How you doing? Lower interest rates won't help the housing market with economic uncertainty. Maybe. I don't know, man. We're going to find out. Like there's not going to be guessing coming up in the next few months as if rates continue to fall, even if they don't, even if they stay at 6.27, 6.3, whatever, we're going to find out. There won't be any guessing. I don't think anyone is disagreeing with you when you say it's a good time for the wealthy to buy a home. Yeah, I mean, there are wealthy people buying a home, but I also have first-time home buyers looking to buy a home and going into contract. I have investors I'm working with that are going into contract. But you're right. It's the wealthy are buying homes. Let me see. Pocket Watchdog, what's happening? If rates get cut in half, think house prices cut in half or even 20 to 30% on the national average get cut in half. If rates get cut in half, I think prices will go up. Let's hope that doesn't happen. But if they do, whoosh. Planet of the Amps. I can only assume you're into car audio. I can only assume that. Maybe I'm wrong. If you are, that's pretty cool. If we knew the incentive and concession numbers to offset these elevated values, we'd have accuracy. Now I understand what you're saying. Actually, that's a field now in the MLS. When I close out a property, when I'm all done, and the client has bought the property and everybody's closed, I have to enter the final data in the MLS as a realtor. And part of that is there's a field at the bottom where I have to state how much concessions are. Like, did the seller give up anything? Did the buyer give up anything? Or really seller concessions, not buyer concessions. So I have to put that in there. But you're right. Bravo to you. That's not reflected in the sales price. But it's never been reflected in the sales price. Meaning, if there's a delta there between the concessions and what the real price is, it's always been like that. So it hasn't changed. And yeah, sometimes you'll see, and there's a limit though. It's usually like, I think it's usually like 3.5% on a lot of loans is the limit on concessions. But when somebody sells a house for sale by owner on Zillow, they're not doing that, right? They're not putting down with the concessions in there, because you're supposed to, as a realtor, put down the price that was recorded, the actual sales price. So that's what I have to put down. But great point. Maybe I'll show that to you guys one day, how that works. I don't know if I'm allowed, but I'll try. All right, check this out. You guys are going to love this. This data is crazy. All right, so I'm going to show you right now the 3-year change in metro level home prices between July 2006 and July 2009. The reason I'm showing this to you is if you look at the 30-year fixed mortgage rate right now, look at this. And by the way, if you're joining us, give me a thumbs up, give me a like, get more people involved. That's all I ask. If you look at mortgage rates where they were, and this is why I'm going to show you 2006 through 2009 and compare it to what's been going on now. You can see mortgage rates in 2006, let's call it, Like, look at this. They're really close to where we are now. They were at 6.4% back in September of 2006. Really close to where we are now. Very, very close. And look, they dropped. I mean, they dropped and dropped and dropped and dropped all the way down to 3.42%. Let's hope we don't get there. But the point is, like, when they started to cut is when we entered a recession, right? We know that from history. But when you look at the change in home value, this is going to blow your mind. This is just from, I think how they captured this on Resi Club is July 2006 through July of 2009. Yeah, that's what they say. So the first thing that stands out to me in all this is there are markets where prices went up. Did you know that? I didn't know that. Salt Lake City, Utah. In some of the worst years of the housing market, prices went up 7.8%. What? Provo, Utah. They went up 5.2%. Sorry. Had to set a timer. Let's keep going here. Lubbock, Texas. Prices went up 18% from 2006 through 2009. That's crazy. Now, and if you look, it's kind of like the middle of the country did much better. Even parts of the Northeast, like, well, look at Columbus. Prices went down 8%. Let me take this comment off. Prices went down 8%. That's it during the GFC. Well, not during the GFC, but through some of the worst years of the housing market. Prices went down 8% in Columbus. Like, a lot of people have the idea that prices during the GFC went down 40, 50, 60% everywhere. Not true. There are places where they went down a lot. Like, look at Las Vegas, down 51.8. Look at LA, down 32.5. Look at Phoenix, down 45%. I lived in this area, Southern California, the river. I lived in Orange County, but the LA, Orange County area, we just looked at that, down 32%. San Diego, down 34%. And I wasn't in real estate then, but I was in new construction in a service industry. And yeah, like, the bottom fell out quickly. And when it fell, we were like, people were bulldozing new homes. They were ghost towns. Much different than right now, even though there are people that say, hey, I went to new housing developments and there's a bunch of unsold homes. Yeah, good for you, but that's not the same thing that you saw on the ground in 2006, 7, and 8. Look at San Francisco, down 26%. I think Stockton may have been the worst. Let me look at Stockton. Yeah, look at Stockton, California, down 60%. What? That's carnage. Look at Seattle, down 13%. Portland, down 11%. Let's go out east. Atlanta, down 16%. What do you got? Miami, or not Miami, Clewiston, Florida. I don't know where that is. Is that Miami? Down 31%. Cape Coral, down 52%. Tampa, down 36%. Washington, D.C., down 29%, 27%. And I'll put a link to this article, but I think this is free. This is one of his free ones. And you can click around here and kind of look at the carnage yourself. Detroit, Michigan, down 39%. I mean, it's crazy. Like, Detroit crashed. Columbus was down 8%. Cleveland down 12%. Cincinnati down 9%. But look at this. Buffalo up 6.5%. Syracuse up 6%. Scranton, PA. Dunder Mifflin territory, right? Up 6%. So there are areas where even Kansas, look at Wichita, Kansas, down 7%. There are areas where prices went up. I mean, Kansas City only down 1.6% during the worst housing crash we've had in recent history, right? In modern times. Look at Baton Rouge, Louisiana, up 6%. Here's what's really nuts. Look at this. Look at Houston. It actually went up 0.7%. Dallas was down just 3%. Austin up 2%. San Antonio up 5%. I mean, I did not expect that at all. Now, check this out. This is 2022 through 2025. Basically, what Resi Club did was look at, all right, when home prices peaked, after they peaked, where did they go after that? So they peaked in 2006 in many areas on that cycle, and then they started to fall. How far did they actually fall? Well, we just looked at that, and we can click back and forth if you want. But this represents where when they peaked in 2022, we just saw it today. Many areas like Boise, Denver, they peaked in 2022. Then they started to fall. Prices did. But the results have been much different between those two time periods. I've heard a lot of YouTubers say we experienced, even Logan, who's really a housing bull at Housing Wire, said we experienced a faster price decline in 2022 than at any other time in history, which is true. A lot of areas, the prices went down fast. But how have they reacted since the peak in 2022 overall? Well, look at this. Since the peak in 2022, Columbus up 8.8%. New York up 12%. Chicago up 11%. I mean, if you look at the map and take a step back, you can see the Northeast and Midwest are killing it, right? Miami up 6.7%, but there is some pain out there. Austin down 22%. So is that the crash? In other words, have we seen the crash? Has that already come and gone like a thief in the night? Maybe. Something to think about, right? Phoenix down 10%. Las Vegas down 2% since 2022. Los Angeles up 4%. San Diego up 3%. San Francisco down 10%. I mean, look at Rochester, New York. I heard somebody say on a video recently that Rochester, New York was done for. Way too much inventory, definitely crashing. I mean, the home prices are up 20% there since 2022. I don't know. They must be looking at a different area they must be looking at a different Rochester, maybe like Rochester, who knows where. Rochester, Louisiana or something, because it ain't in New York. Milwaukee, up 16%. Chicago, we just looked at that, up 11%. Cincinnati, up 11%. Cleveland, up 15%. I'm clicking all around here, but it's just fascinating to look at this. To me, it is anyway. Denver, down 7%. So again, have we seen a crash? Like, has that already happened? Has it come and gone? I don't know. I thought that was kind of a cool article. And this is the actual article itself. Yeah, it's not I don't think, let me look and see. Is this let me look and see if it's a pro report. Oh, it is a pro report. You got to be a premium member to see this report, but lucky for you, I am. So it's, you don't have to pay as long as you just watch my channel. I think it's like $300 a year or something like that, around there. Well worth it if you're a housing nerd. But anyway, Lance from Resi Club just analyzed that and took a look at it. Here, this is kind of cool. Look at this. Here are the markets that were down the most during the 2006 through 2009 housing crash. Merced, Modesto, Stockton, Vallejo, Salinas, Cape Coral, Las Vegas, Port Lucie, Phoenix, Northport, Palm Bay, Reno, Fresno. Like, those were all down a lot, right? Look at these markets that were up. Huntsville, Alabama, up 27%. And he even has a note in here about Huntsville, Alabama. At first, after cutting the data, I was concerned that something might be off with Huntsville. I did some digging and found local articles explaining how the market largely avoided the 2008 home price crash due to the city's growing economy at the time. Wow. Huntsville up 27% during that time. Jacksonville, North Carolina, it's a big military town, up 20%. Ithaca, New York, 20%. Lubbock, Texas, up 19%. Asheville, North Carolina, been there many times, up 9%. State College, PA, where Penn State is, up 8.5%. Like, so I was shocked. Like, that's why I want to share it with you guys. And tell me what you think. Comment, obviously, on this, but a lot of markets where I thought every market in the U.S. crashed, right? Isn't that what happened? No, that's not what happened. So maybe now that's not what's happening. Look at the markets that are down the most in 2020, 2022 to 2025. Austin, Punta Gorda, Johnstown, PA, which is a weird one. Eureka, California, New Orleans, Cape Coral, a lot of same markets. Phoenix, Boise, Boulder, San Antonio, Chico, Naples, Texarkana. And look at where they're up the most. I mean, some of these markets are up a ton. Syracuse, Rockford, Illinois, Hartford, Connecticut, Springfield, Ohio. Y'all remember Springfield, Ohio, right? Well, maybe that publicity did something for the market because they're up 20% since then, since 2022. And he uses Zillow data, like Nick Gurley uses Zillow data. Not a lot of people know that, but that's what Reventure uses on their app is Zillow data. That's what Resi Club uses is Zillow pricing data. So it's it should be interesting to see how it all changes. Here's the map side by side. This shows us that, where the pain was before and kind of where it is now. A lot of it's the same. Some of it's not. Like Texas is definitely worse this time, right? Our Texas market. But the housing market just seems this time more resilient right now, but you don't have unemployment. That's the big, probably the difference, right? You don't have a ton of unemployment in the economy. And it shows in the housing market. That was my point earlier, that you can see it in the housing market when the economy changes. It's like people say your stomach is like the linchpin of your body, right? How your stomach goes, the health of your stomach and your gut, intestines is how your body feels. Well, I think that's what's going on with the housing market. The economy will change the housing market. And it was bad back then, right? Really bad. Unemployment was horrible. All right. We can get back to some metros now, but I thought that was pretty interesting info. Oh, Tech Ninja. What's up? Yeah. So you bought you went out and looked at a house, or you actually bought a house. It was priced at 2.4 million, right? And you're paying 1.76 million. Good for you. Yeah, you got a deal there, man. I mean, you got a discount off of retail. I love that. That's fantastic. That's what people should be doing, making disrespectful offers. We aren't seeing that 44 or 45% price drops. Too many retirees paying equity cash into their homes here, or investors, Airbnb people. Yeah, it's just a different market. The other thing that we don't have or we didn't have then, are the massive institutional investors. People don't like this, but man, like investors came in. I'm not saying I like it. I'm an investor and I don't even like this, but investors came into the housing market right in the way, maybe some people say the worst time, 2012, Fannie Mae, Freddie Mac, they gave him 0% interest loans, 0% interest loans to buy up the housing stock. All the foreclosures out there. And then institutional investors figured out, you know what? It's a good time to be an investor. This cash flow makes sense. These rentals make sense. I can buy them for pennies on the dollar. So they did. My hypothesis is that if prices do come down, investors will step in and buy those homes. Unless buyers, like normal buyers, buy them. So if buyers aren't going to buy the houses, investors will. If prices get low enough and the math makes sense, I just think that's going to happen. And I'm not talking about institutional investors necessarily. I'm talking about mom and pop investors. Yeah, you're right, Pocket Watchdog. And by the way, Tech Ninja, I'm going to get to your spreadsheet you sent me, right? You sent me that spreadsheet. I am going to get to it. I apologize. I've had some clients to deal with to help, and they're a priority. But I will get to it. Let me just checking out your comments here. I wonder if we could separate corporate purchases. We'd see a huge gap in calculation. Yeah. I can't do that nationally. I could do it locally, though. It's not a bad idea. It's not a bad idea. Which will be the result of BBB budgets. Oh, you guys are talking about Medicaid and stuff. Okay, let me show you this. I was going to get to some other metros, which I will, but let me show you this info. This is all about investors. I know you want to know about this. Investor home purchases, maybe you already saw this article, but investor home purchases fell 6%. Sorry, I'll say that again. U.S. investor home purchases fell 6% in the second quarter, the biggest decline since 2023. So this shows us the percentage of like how investors are doing, like year over year, month over month, and all that stuff. They say in the second quarter, purchases of U.S. homes fell to their lowest springtime level since 2020. The decline was especially big for condos, but investor market share held steady from a year earlier, signaling that declining investor activity reflects the overall housing market slowdown. Interesting. U.S. real estate investors purchased roughly 52,000 homes in the second quarter, the lowest level for that time of year since 2020. That's down 6% from a year earlier, the biggest drops since the fourth quarter of 2023. This is based on a Redfin analysis of county-level home purchases in the 39 most populous U.S. metros. We define an investor as any institution or business that purchases residential real estate, meaning this report covers both institutional and mom-and-pop investors. Mom-and-pop is like 80% of investor activity, last time I looked, about 80%. Profit growth is shrinking, turning off some investors. The typical investor earned $195,934 in capital gains via selling a home in the second quarter, up 1.7% year over year. For comparison, at the start of 2021, investor capital gains were up more than 30% year over year as investors snapped up properties and quickly sold them. Now, let's go to their data because this is the article, but let me show you this. So you can come here and look at this too, but this is the investor data. So investor share by metro. So nationally, investor purchases make up 17% of all purchases. So not percent of market share, like they don't have 17% of all the homes, but rate like currently owned. But they did buy 17% of all real estate transactions were in residential anyway, were investors. But if I look, and this is pretty crazy, if I look at investor share by category, check this out. So look at single family residential. It's actually gone up a little, like since back in 2020. 16% of all single family homes are purchased by investors. Pretty interesting. Now, if I look at price tier, look at this. Low priced homes. So they separate homes into low, mid, and high prices. 23% of all low priced homes purchased by investors. So if you're out buying a low price single family house, or I'm sorry, a low price house, low price property, you're probably competing in a lot of cases with an investor. That does happen, obviously. It's only 11% for mid price. And look at high price. High price is higher. It's 15% of all high priced homes are purchased by an investor. Now, if we look at this year over year investor purchases, and I look at property type, and I look at residential, they're down 4%. So investor purchases are down 4% year over year for single family homes. So they are buying fewer single family homes than last year as far as a share of overall spend in the housing market, but they're still buying. Let me show you this next. Let's look at this. So like if I do Columbus, they don't have every metro in here, but so Columbus has gone down in the number of, or the share of investor purchases, 14% now of all homes bought by an investor, of all types of homes too, 14%. At one point it was 25%. Yikes. Let's do Atlanta. 16% in Atlanta. Investors. I'll show you the one that's crazy. This one's probably high. Look at Cleveland. 22%. 22%. And that's come down. I mean, it came down. We were at 27 last quarter. Or look at quarter one. This is quarter two. We looked at Denver earlier. Let's look at Denver. 12% in Denver. Okay, not as many. They actually peaked at 18%. I'm sure about Los Angeles. 24% in Los Angeles. Wow, that's high. I see, to me, in my head, as I think about it, I'm like, I don't know how the numbers even come close to making sense there. I've looked at deals in Los Angeles. I go out there for vacation. I'm like, I don't know. I'll go around and look at some deals. They're like not even remotely close. But maybe they're hunting down opportunities that the average person doesn't see probably. So I guess the point of this exercise was, hey, investors' share of properties, the purchases, that's down, but it's not down, like it's not gone by any means. Let me look at this. They bought 52,000 homes in quarter two. In 2021, quarter three, they bought 100,000, double. But look, back in 2008, look what happened. This is what I really want to show you. Look at this. 10,900 homes. And then it went up fast. So after the GFC, people, investors piled in. That may be the difference this time, that investors pile in. And they're a lot of them institutional investors, right? Prices get cheap enough. They may say, well, time to buy. All right, that's investor stuff. Now let's look at some more areas. And then I got to wrap it up. I'm getting my power shut off in like 20 minutes. I was alerted that the power company was doing work in the area. They're going to shut off my power. It'll be lights out for me. Let's go back to my list here. Let me look at this. Miami. Check this out. Miami, Florida. Active listings. Look at this. Falling in Miami, Florida. 13.17% year over year. That's it. Inventory's falling like it is in a lot of, like we looked at Sarasota County. It's nuts. Nuts that inventory's falling there like this. Let's look at, well, to cut down the time, let me just look at two metrics. Median sale price. Look at median sale price in Miami. $572,000, up 5% year over year. No crash in Miami, obviously. Let me look at Boston. Boston, Massachusetts. Active inventory. Well, it's falling now, but it had peaked earlier in the year at 9,600 units. Now they have 8,000 units. So they are up 16% year over year. That's good if you're in Boston. I'm sure you want more inventory. It's got to be difficult there. Median sale price. Looks like it's following seasonality, but it's been up basically all year. $750,000, up 3%. Geez. I'm going to quickly see if I can just find one that's crashing. Washington, D.C. Let me do active inventory in Washington, D.C. Look at this. In Washington, D.C., remember Doge was going to crash the market there? I don't know. I mean, inventory's falling like a rock. It peaked. There were a lot of homes on the market at one point. You had 17,000. Now you've got 14,000. And it's falling down. It could fall underneath last year at some point. A lot of these metros look the same. It's very, very strange. When I say strange, I mean it's strange because everything we've been told and, you know, a lot of the data was showing earlier in the year that prices were going down and inventory was exploding. Look at Washington, D.C. median sale price, $581,000, up 2% year over year. Look at this one. Ready for this one? This will make your head spin. Houston, Texas. Look at this inventory fall. What? Yeah. Inventory falling there. Down, falling. Only up 16%. It's not still going up. If you had a lot of distress, if the economy was at the point nationally and certainly in Houston that people had to list their homes because they couldn't afford it and they had to bunk up with their relative, you would see the homes on the market. You would see inventory skyrocket. If nobody was really buying any homes, you wouldn't see any home sales at all. But we are, because not everybody's delisting their homes. There are people buying. Median sale price in Houston. What do we got? Up 1%. But the weird thing is, it's higher than it started the year. Started the year at $333,000 in Houston. Now $339,000 in Houston. So it's possible. Well, it's up year over year, but it could keep going sideways and end up higher than all the last 4 years in Houston. That would be crazy. We'll see if that happens. Nashville, Tennessee. Active inventory. Same thing, right? Now headed down, up 16% year over year. You've got basically like, what, 2,000 more listings, about 2,000 more listings than you had last year. So there are opportunities out there. I'd be out there looking. If I'm in any of these markets, I don't see why I would wait to look. I'm not saying you should buy in all these markets or you should definitely buy a house now. No, you got to find the right deal for you. Got to find the right deal, like Tech Ninja did, where he got a discount because the person obviously needed to sell their home. What about median sale price in Nashville? What do we got? And I'd love to hear from you. I'd love to have you on my channel if you have a story to tell about a discounted home you got. Like hey, I went out, I did what other people won't do. I was patient. I was ready to swing a hammer if needed. I was ready to, I was ready to do some rehab work if needed. I was ready to look off market. I did. I found a deal and it worked for worked for me and my family or whatever. I'd love to hear your story. So you could email me. And if it makes sense, I'd love to interview you if you're out there. $471,000 for Nashville, Tennessee, up 4% in median sale price. So it is down from the peak this year, but every market is, because that's how seasonality works. But it's not like crashing year over year. I don't know. You all tell me. I've been through some cities today. I ain't seen a whole lot of carnage as far as prices go. I'm seeing carnage as far as inventory goes, and it's falling. Oh, you know what? Somebody wanted this. Travis County, Texas. Travis County, Texas. What do we got as far as active inventory? Oh, okay. Well, it's headed down like seasonality, but 15% up with active inventories. You got 15% more homes on the market. Good. It's 8,000. Last year you had 7,000. You got another 1,000 listings. Let's see about median sale price. Where are you? 545 grand, up 6%. Wow. You started at 497. Now you're at 545. I'm just going to set my timer here. Look at peak. Look at this back in 2022. So maybe we already had the crash. Maybe we already did. $655,000. That is up 20% at that point. And then now you're at 545. I mean, that's $100,000. 100 grand drop in Travis County, Texas. It's in Austin. That's Austin. That's what that is. So, like, is the crash over in Austin? I mean, this was the thing that everybody was ringing like the bell, right? If anytime you argue with anybody about, when they say the housing market's crashing, and you're like, well, I don't know, like, I'm not sure it is. And as far as, the whole US, oh yeah, it is. Look at Austin. Well, Austin was like, yeah, it's time to go down. And they did. Now they're going back up. I mean, it's very likely that Travis County, Texas the median sale price is going to be higher than 2022 coming up. I mean, it's trending that way. Yeah, unreal. Unbelievable. Oh, you know what? Let me see if I can squeeze this one in. All right. Well, I'm going to try this one. This is, well, let me first look and see if we have Kansas City on here. That's what I'm trying to hit, but they don't. Yeah, it doesn't come up. I don't know why. So they do a county though. So I'll do Jackson County, which is part of KC. Jackson County, Missouri. Active inventory. Let's take a look and see. Down 3% year over year. You have fewer houses on the market now in Jackson County, Missouri than you did last year. Fewer homes, not more, fewer. And it's headed down. What? It's been down underneath last year for a while. This is crazy. All right, median sale price, where's that? Up 1%, $269,000. You peaked this year at $295,000. Prices aren't crashing there either. And it's more expensive than last year to buy a home there. It started at $251,000, now $269,000. Man. Let me see. Oh, I got Phoenix. By the way, I have another channel, the Ohio Housing Nerd. So if you're wanting more Ohio info, I have a channel all about Ohio. And I do a live usually on Sundays. Sunday evenings, and we dissect the Ohio housing market, and that's all we talk about. So if you're interested in Ohio, tune into that. All right, let's do Arizona. Active listings in Phoenix. They're kind of curving back up. That trend line's kind of flattening out a little bit, but it's not going straight up anymore. Now let's look at median sale price. Wow. Basically flat, 456 grand. This area did start higher, or I'm sorry, low. It started higher, right? 461 grand. Now 456. Look at, I mean, that's a 4-year high for this time of year. I guess it's in that little realm. But again, look at 2022. Maybe that was their crash. Look at the price decline in 2022. It peaked at 488. By the end of the year in Phoenix, it was 429. So lost like $60,000 in just a few months. That's a crash. That's like a flash crash in Phoenix. Wow. Wowee. But this year is completely different, right? And since that crashed, it's definitely been different since 2022. Again, maybe their crash already happened. Is Phoenix? Look at Boise real quick. A lot of people said, hey, this will crash too. Oh my goodness. Look at Boise, Idaho, 9%. Inventory is 9% lower than it was last year in Boise, Idaho. They almost have a 4-year low in active inventory. Whoops. Median sale price. What do we got? Yeah, look at the median sale price now up 5% year over year. Started at 473, now 495. And just like the other metros we looked at, 2022 is the peak at 546. So that's a $50,000 difference approximately. Man. Let me do I should do Columbus since I live here or live near the area. Let's do active inventory in Columbus, then I'll take some comments, wrap this thing up. Active inventory up 20% in C-Bus, starting to fall, but it's good. We need more inventory. The inventory we do have, though, isn't great inventory, a lot of it. It's inventory needs, 100 grand in work to be livable. I'm sure you're seeing that too where you live. Median sale price, 355. No crash in sight, up 4% year over year. Ohio is off the hook with the housing market. It just keeps going and going. Relentless with the price gains. Not an all-time high, but we had it earlier this year at 363. So, I mean, this market completely different than Boise, Phoenix, Austin, completely different animal when you look at the differences of how the market's reacted over the past few years. A lot of those COVID boom towns really got slaughtered with pricing from the peak in 2022, and now they're recovering. Man. What are you guys talking about? Oh, you're talking about insurance. Boy, you guys are on a tangent here. I drive over there every few months. No way I would buy there. I would buy 5 properties for the cost of one in some coal estate before ever renting out there. I'm not sure what you're talking about. Sorry, I'm behind in the chat, obviously. I'm just looking through to see if anybody wants to look at a market. But you guys are talking about weird stuff. That's okay, though. Continue. Canadians leaving affects house prices. Okay. Yeah. Obviously, fewer people would affect home prices. Let's see if I got anything else, any other cities on here. Phoenix, Miami. Oh, somebody wanted, somebody had emailed me and they wanted, Seattle. Active inventory in Seattle. Look at that. Up 20%, 21%. Again, going down though. Headed down. Median sale price. What do we got? Up 1%, 839. Goodness gracious. No crash there either, though. I mean, started at 775, now 839. Peaked this year at 871. My goodness. My goodness. I'll do Portland since I'm up here. Portland, Oregon. Portland, Oregon. Active inventory. Up 16% in active inventory. Median sale price down 1%, 553,000. That's what's happening in Portland. Prices haven't crashed there, but they are down year over year. I guess we found one or two. We have maybe one or two today that we have prices lower. But I don't know. It's more of the story is if rates continue to fall, I think you'll see more buyer demand. We could see more inventory, but we need like some catastrophic event to increase inventory to any level quickly. I don't know if, I mean, the data is clear. I looked at a ton of markets today. I don't know how many, 20, who knows how many. We looked at investor information. We looked at what happened in 2006, 2009, 2022 through 2025. It is what it is. Like, there's just not a level of desperation that we saw leading up to the GFC. I know that people want that desperation who want a housing market crash, but right now I'm not seeing that. I'm seeing a stuck frozen market. And if rates get low, it could free that up. We could see prices continue to go. If they get really low, we could see prices explode again. So we need more inventory, folks, in order to cause some type of housing carnage, really, in prices. You could see it in 2022. So if we can replicate that at some point in your market, watch active inventory. You know, don't pay attention to the noise. Watch the active listings for the type of house you want to buy in the area you want to buy in, and look at it on a historical basis. Go back into the early 2000s if you have to, and look at the number of homes for sale and see how it's changed. And it'll tell you what's going on. You have a lot more inventory than normal. Prices are probably coming down. You could probably find a great deal. You don't have any inventory out there. It's going to be a challenge. Look for homes that have been on the market a while. Make a disrespectful offer if it's been on the market a while and have price cuts. Be willing to do some work to find an opportunity, right? Some rehab work. Find a house that stinks, that smells, but is in the school system and it's in the location you want and has the structure of the house you like. If the carpets are nasty, if the bathroom's nasty, if the kitchen's nasty, rip all that out over time, add some value. Be willing to do that work, that hands-on work. I'd also say to look off market. There's foreclosures out there. Somebody asked about foreclosures. Foreclosures are increasing. They are. That could change the trajectory of the housing market. Are there enough foreclosures? I don't know. I'm not convinced there are to cause that type of pain. But who knows? That could increase too. So you could watch the foreclosures in your area. And if you find something off market, or if you want to find something off market, a good way to do that is driving around the areas you want to buy in. and finding houses that need work, writing down an address of that house, and then sending them a letter in the mail that says, "Hey, I want to buy your house," or "I may want to buy it." I use a letter like this. Can you see this? That's what I send people. I send them a letter that's called a yellow letter, and it's handwritten, and it just says, "Hey, this is who I am. I'm interested in buying your house. Are you interested in selling it? If not, no big deal. If you are, give me a call." You'd be shocked. People call. "Hey, yeah, I'm interested." And if you're trying to find a house to live in versus me being an investor, you can find that there's definitely somebody out there that's willing to sell their house to you, and probably at a discount. And you don't have to use a realtor. And you can save yourself some commission there on the buy side. It's not impossible to buy a house without a realtor. People do it all the time. So think differently than others if you want to find an opportunity in today's market. That's how I look at it. This isn't 2017. It's just not. It's not going to get back there probably either anytime soon. Not based on the tea leaves that I saw today. You guys still talking about insurance on here or AI? Do you think AI will replace realtors? I know some people think that. I'm wondering if it will. What's up, Jonah the One? I did Denver a little while ago. Look on the replay. I did Denver, but thank you for asking and thanks for watching. Give me a thumbs up, man. I appreciate it. I appreciate your time. You guys are going back and forth. It's funny on the chat. Regarding AI, I don't think it's going to replace realtors because people still, I want to believe that people still want to work with someone else, like a human, when they're making an emotional decision like a house. I do. And I don't see how I don't see how AI is going to do that. But I'm not a wizard either. So maybe it will. Maybe it will replace us. I'm not sure. Be interesting to see. All right. You guys have been fantastic. I'm going to get out of here. We did a lot today. I appreciate your time. Appreciate the conversation. Appreciate the attention. If you have a city you want me to analyze on the next Housing Nerd Update, put it in the comments on the replay, and I'm happy to do it. And I will see you next week on the Redfin Update. I'm the Housing Nerd. Have a good weekend, and I'm out. OUT, 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 out.